Welcome, Abhinave. Retire into the stock market session 12, February 14th, 2025. How are you?
I'm fantastic. How are you?
Very good.
Good.
You are graduating today.
Oh, I broke. That's why I roll my cap.
Love the cap. Not everybody makes it to session 12. Some people they think, I don't know what they think. They don't want to do any work. They don't want to write any journals. They don't want to review any videos. And they kind of fall off. Not everybody graduates from college. So I'm happy for you this day.
Me too. Thank you. Thank you for giving me this opportunity.
Session 12. And how are we doing? Do you feel like you've learned a good amount to retire into the stock market? Enough,
I
sufficient?
have. I have. I wanted to share a little a thought with you that I had last night, because um yeah, I've learned so much in the last 12 sessions that it would have probably taken me years to figure all of this out, right? And more important than that, besides the sessions, is like just having the dialogue with you and with our group and just being able to talk about situations that we get into with a trade. And it got me to think it's like every trade is almost like when you take a dive off of cliff, or more like you're flying in an airplane. Once you're in the trade, you're like in the air. It's gonna, you're gonna go up and down, and you need to know how to manage the flight and have a safe landing for the most part, right? Minimize any kind of damage. That's what it feels like when you get into the trade. You're flying a plane, and the stock will go up and down. Your position might go up and down. You have to know, like, and the other part, it feels like you're almost building the plane while it's in the air, like when you were talking about what you go from one trade and then you add a call to the one side, or put, you know what I mean? Like you can build the position out. You're almost like constructing it while it's in the air flying. So it's like so interesting in that sense. And like I don't think most people understand what it takes like to trade or to just do what we're trying to do. Like there's a simple fundamental way that we've learned, but but essentially you have to manage your positions right over time. You have to fly the plane.
You said it. Manage your positions. That's what you're doing. You're managing. You're adjusting. You're fine tuning.
Fine tuning,
You're
tweaking.
honing. You're tweaking. You're honing your trade to get the best output.
Yeah, I think that's one of the biggest takeaways for me. Even like if I tell someone else about, let's say, a covered call, like today, I'm going to walk us through a presentation, but it's like, you almost have to get someone to understand. And maybe that's where the fear comes for people that didn't finish this or don't successfully do it, is because they realize they're flying in the air and they're like scared at this point. They're like, shit, I'm going to crash.
Oh, you know what? That's also a part of it. Sometimes people get afraid to actually do the thing, which is to put their money up for investment. Maybe they don't trust me, or
Don't trust
they don't trust
themselves.
the market, and they get kind of like freeze and they get kind of like stuck. That's something that happens too.
Yeah. Or they don't trust themselves because they don't feel like they can do it. They don't feel like they can manage the trade. They can't fly the plane in that metaphor, Like,
Yeah, I feel like you had some faith in me, but I can tell I pushed you a little bit to do some trades that you weren't really sure about. Am I right?
well, yeah, and I think that's really what it comes down to, is like being challenged. I wanted to bring one example on the call, which this is what really got me, and it was yesterday when we spoke. Because I don't want to come in here and be like, okay, I got my 12 sessions, I'm about to graduate or whatever, and now like I know everything. Because I don't feel like that. I know everything because I don't. I just know enough to be dangerous, but I know there's more. There's more. And I
You were
felt,
dangerous when you came in the door, man.
well, but what I'm saying is like yesterday when we were trying to look at correcting or fixing one of my positions in Nvidia. See, I thought of a situation of what I was gonna do to like roll the position, but then you came in and you showed me something totally different, where what I was gonna do was gonna cost me like $1,000, and what you told me to do ended up actually basically costing me $60 to get like 15 points of share growth by rolling it to the next month. And what I learned from that is I actually sat down and reflected, and I said, there's a lot more to this than meets the eye. It's really like recognizing these patterns that show up and then knowing what to do to tweak your position. And that's where the plane flying analogy came to my head. It's like you've taken off, you're in the air, and now you got to be able to like balance with the turbulence, with the, whatever is going to happen. You need to be able to adjust your flight path to the destination, which is, your profit.
Correct. Yeah, and it's like the stock market is something I equate it to chess. It's easy to do, but hard to do well.
Mm,
There's a lot of moving parts. It's kind of like riding a bicycle is easy, right?
yeah,
But driving a 18 wheeler, driving a big ass truck, you go down the street. Sometimes you see these trucks. Sometimes they take out the curb, doing the turn. And even experienced drivers will sometimes over guesstimate.
yeah,
It's so much more responsibility to drive that big truck, and there's a lot of moving parts.
yeah. Yeah.
I think the stock market's a lot like that.
It is, and I think that's maybe one of my takeaways to say about this 12 session course that you have is like um it's not enough to say like, oh, just because you did your first few covered calls, like you got it all. You know what I mean? Like there's all these other conditions that will show up as the market does what it does that you need to know how to navigate out of. And what I'm actually looking forward to is probably what not most people think about is I'm actually kind of excited if the market really pulls back like 30-40% because I want to learn how to make money when the shit's completely down too. And if I can, because anybody can make money when it's up, right? It's not that hard. You just do the right thing for the most part by buying a good company and it's going up. But when it's all down and you can still make money, then I feel like that's where you can say you've leveled up. Kind of going back to your analogy from the last session, I feel like you've become more of a an agent or an adept to like a champion. You've kind of leveled up if you can do both. But if you can only make money when it's going up, then that's pretty like, beginner.
Correct, correct. The real traders are gonna make money regardless whether it's going up or down,
Yeah.
and you can always find your trade. You can always find your trend to play your trend.
Yeah.
No matter what economy, no matter what president, no matter
No matter
bear
what.
market, bull market.
Yeah. And also I was one last thing I'll say is I've learned because we learned so many different types of options trades. Of course, covered calls. We talked about spreads, credit spreads, debit spreads, straddles, strangles. We talk about, in the money, deep in the money, out of the money. And what I learned from all that is there's degrees of freedom in each type of trade. Like there's things you can do to tweak each type of trade, and that's where I think someone like me realizes that it's not like so easy and straightforward. Like, yeah, the idea is, but once you're in the position, all the tweaks you need to be able to make and know, that's I think going to take me a little longer. That's why I don't feel like just because I'm at this session 12, I don't think I can say like, oh, I know everything. I know a lot, but I also know like, when they say like a wise person knows uh, not what they know, but how much they don't know, because you realize like the subject matter is so much deeper than what it seems. So yeah, I mean, I feel like I'm just starting my journey in one way, even though I'm ending sort of the 12 sessions. But I feel like I just kind of got a crash course to get myself up to this level. But there's more to climb for sure, and I feel that, and I'm really grateful for you for that, man.
With great power comes great what?
Responsibility, 100%. I mean, yeah, 100%. And it's
Appreciate
teaching
that.
me so many things. Like, I mean, with trading, one of the things that it's teaching me is I'm having to face a lot of my own emotions that you feel when you make a trade. And let's say the market does something and now the trade is going against you, and you feel a certain kind of way. And like it makes you manage your emotions too. Like you have to, otherwise you make some stupid move and now you lost money or whatever. And now you're like, well, I could have done that differently. But anyway, I'll be quiet from here. I just wanted to mention all that first.
I appreciate that, and I agree.
Yeah.
And without further ado,
Yeah.
Abhinave, otherwise known as AKA the Rainmaker, is
The
going to
Rainmaker.
present how to retire in the stock market.
Yeah, let's do it. Okay.
The show is
Um,
yours.
okay, let me share
I'm
my
gonna take
screen.
notes. I'm gonna take notes.
Yeah. Yeah, you better take some good notes. I learned some good stuff. I'm gonna send you a request here. I want to screen share because I made a little pictures and stuff I want to show. Okay, so
You made a presentation. I just pressed a button. Is it gonna work?
thank you. Yeah, yeah, I got you. Now let me do slideshow here. Yeah, I made a little. It's not long, but I figured it's always better to look at something than to just talk. Uh,
Got some visuals.
yeah, I like visuals. I think you do too.
Hey,
Uh,
we can use this.
you like that? You like that little rainmaker right there?
Yeah.
You like that? It's raining money outside. Um, so
100K to easily make 3 to 4K monthly. I'm on it. Go for it.
yeah, so I want to start by first like saying what do you hear mostly, right? People say, okay, invest in if you're gonna invest your money, the few common things that people will do is either put it into some kind of high yield savings account that'll give them at most, let's say 5% a year. Most people consider that a pretty safe investment. Then you'll hear people that say like, oh, you can do life insurance, you can do this or that, and then the more like kind of TikTok will say like, oh, well, you could buy ETF or a index fund or something like that. Get yourself diversified, and that's kind of like what most people end up doing, and they just end up like holding those for long periods of time. But I want to show today a different way where you can make money in your trading account or your stock account where you don't always have to sell your shares and you can make monthly income. So I want to walk people through that today. So if you give me 100K, I want to show you how you can easily make at least $3,000 to $4,000 a month, maybe more. Okay, but we don't want to overpromise here. We want to make sure the market is going to be in the right condition to give us more. But even on a bad day, we can still make this money. You with me so far?
Yes.
All right, let's get into it. So you gave me 100K, right? And I'm going to show you how exactly to invest it, exactly what you're going to need to do. And if you have questions, feel free to ask. So the first thing we're going to do, we're going to take that 100K. Okay, I want to show you this chart here on the right. It's Pepsi, right? Who doesn't like Pepsi or Coke? These are like, staples in our culture, right? Drinking Coke or Pepsi with burger. They're both good companies, but I like Pepsi a little bit more than Coke these days. And if you look at this chart that I have, the all-time chart, you see it's really going up and to the right. They've got some peaks and valleys. And the good thing here is every time it dips, it gets bought back up because people are buying. The market likes this company. So that's the first thing to notice. And we're gonna buy some of Pepsi. Why? If we buy 200 shares of Pepsi, spend about 30K of that 100 we have, we're gonna get 3.6% dividends on Pepsi, okay, every year. Just holding the shares, doing nothing. Just holding the shares. You're gonna get a little more than $1,000 a year in return just by holding the stock. And another reason I like this is because it doesn't require you to do any kind of trading. You just hold the company, and it's a company that we can see is growing, and it's gonna keep doing that. And it's gonna keep paying you a dividend every quarter, which equates to roughly $86 a month, $87 a month if you amortize that. That's probably enough to pay your phone bill, maybe your internet bill or something like that. Okay, but this is just a starting point. This is not all that we're going to do, but this is a pretty good investment. The other thing I like about Pepsi is it's actually a little bit down from its all-time high, and I suspect in the next 2 years it's going to grow back to there. So that's another potential $8,000 you could gain on this stock if it goes up another 40 points. But even if it doesn't do any of that, you just bought the shares and hold them, you're still going to make dividends every year. Does that make sense?
Yes. And I understand the dividends are paid every quarter, every 3 months.
Yes.
But total is going to be $1,000 a year for 30K in Pepsi.
Yeah, roughly 30K, get you 200 shares.
Monthly, it's $86 a month, which is average monthly. I see that.
Yeah.
Good point.
And so now we have about 71,000 left. So let's see what else we could do because now we're going to talk about how we make actual money from from doing one of the strategies that we learned is called covered calls. Okay, I'm going to start with Tesla, one of the stocks and led by Elon
I'm
Musk, which
smiling right now.
yeah. Elon Musk has been in the news for a long time. This is one of his companies, so it's actually a great company and a very good stock for covered calls. It's a little bit of a riskier trade, but if you stick with me here, it'll make a lot of sense, right? So let's say we buy 100 shares of Tesla. By the way, take a look at this all-time chart, right? It's really popped up from 2019 and all the way up. It's also had multiple stock splits and things of that nature. So at the time I did this, the stock's at 360. So you buy 100 shares. Your cost is going to be 36K. And then we're just going to go out a month, right? Today's the 14th. Let's say you agree to sell the shares you bought at 360 a month out and you want to sell them at 375. Okay, so that's about 15 points of share growth, right? And for that, you're gonna get back $1,700. So let me explain that part a little bit. So if you look at this picture that I got, this is called an options table. And in here, this is something you can see in your brokerage platform, your trading platform. On the left, we have the calls, right? We have the puts. In the middle, we have what are called strike prices. So this dotted line represents the current price, where the stock is. And so that's where we're looking higher than our current price because we're going to buy the stock around this current price, 360. So if we go higher, 15 points, we have what's called a sweet spot where 15 points of share growth is giving us at least 15 points of premium, and in this case, a little bit more, which is great. You know, we're getting 17 points of premium for 15 points of share growth. So why wouldn't you take that? That makes all the sense. You agree to sell the shares at 375 in a month. You get $1,700 back, 1735 to be exact. If you do the math on that, you get 4.8% return on that 1 month investment, right? And let's say in a month, Tesla goes over to 380. Now your shares will get assigned, meaning you agreed to sell them, they'll sell, but they're going to sell at 375 because that's the contract you wrote. And you're going to get what? Another 15 points of share growth. So you're going to get another $1,500 on top of the 17 you got. And now you're looking at making $3,200. Remember, our goal in the beginning was to make what? $3,000 to $4,000? You could potentially
Yes.
do that in one trade here. And all we've done
Nice.
is one trade so far. But listen, this is potential, so we're not going to get lost in that. That may or may not happen. But what you're getting right now that's determined, you're going to get that 1735. Okay? So far, we bought Pepsi, we bought 100 shares of Tesla, right? So we have about $35,000 still remaining. Does that make sense so far?
Yes.
All right, let's keep going then. What we're going to do next is another company that I really like right now is Palantir. Okay. $11,000, you're going to get 100 shares of Palantir. We're going to do the same thing we did with Tesla. We're going to sell a 1 month out call. And we're going to do, again, our sweet spot. We're going to go up 6 points, okay, to 116. We're going to buy our shares here at $110, and we're going to go up 6 points, sell it at 116. Agree to sell our shares at 116 1 month out. And for that, we're going to get a premium of $640. 640 times 100 shares, $640. And what does that mean? That means if you do the math, 640 divided by your cost, 110, that's a 5.7% return on this covered call. And again, if you did get assigned at the end of the month, we have built in another 6 points of share growth. So we could double that return from 5.7 to 11.1% if we wanted to, if it does get assigned. But again, let's not get lost in the potential. Let's just keep track of what we got. So far we had 85 for Pepsi on a month, 1700 for Tesla, 640 for Palantir. We're adding up pretty quick. Now we're gonna get one more covered call stock, which I like, which is Nvidia. I've been an Nvidia shareholder for a couple of years. I've been really interested in this stock for a number of years, and it's a great company, right? Again, look at that chart, just straight to the moon, right? Like what a crazy chart that is. Um, so I don't think this company is ever going to be down. It's actually one of the biggest companies in the world right now, next to Apple. So you buy another 100 shares here of this stock for 12K, roughly 13K, and you write a covered call again. We're going to write a covered call 1 month out, 133 strikes. So you agree to sell your shares. You buy them here at 129, agree to sell them at 133, and you're going to get what, $695 for that one? That's a 5.35% return in a 1 month trade. And if your shares do get assigned, you get another 4 points, right? We did about four points of share growth for 5 points of premium, or 6 points of premium roughly. So you're going to get a little more if that sells, and that will almost double your return. Okay, but again, this is potential, so we don't have to really count that today. But so far, we've got three great companies that we wrote covered calls on, and we still have $11,000 left of the 100K. Okay. So I also want to tell you what we've collected in premium so far. We got 1735. Then we got the hold on, did I do this wrong? I hope I did it.
You got Tesla, then Palantir, then Nvidia.
Okay, so I might have goofed this up a little bit here, but point was you get 1735. So let me just do the math real time here. 1735
I
plus
think the middle two, the second two are Palantir in the video.
yeah,
640
1695.
and 695.
Yeah. So you get roughly, let's say $3,000 in premium already, and you have some cash remaining. So let's just keep going with that. Next, what I want us to look at is Costco. Okay, I like this stock because I shop at Costco. I've been a Costco customer for like 20 years. I know most people go to shop at Costco that have a family. It's a great company. Look at this chart. I mean, it's just straight up, right? There's no way you lose,
Wow, that chart just goes straight up.
right? And it's an expensive stock. I'll give you that. It's $1,000 stock. So we're not going to buy 100 shares. But what we can do is we can buy 10 shares, and that'll cost us about $10,000. And we're not buying this for a dividend, even though it has one. We're buying this for what? Share growth. Because this is a company that just keeps going up. And there might be a stock split. So if you bought 10 shares, and maybe if there's a 10-to-1 stock split, if we're lucky, you might get 100 shares. But regardless, you have a great company that's going to keep growing. And now, guess what? You still have $5,600 left, which I'm going to show you something else we're going to do with. What we're going to do next is finally put some money in fire insurance for this account, right? $100,000 is a lot of money for a lot of people. Um, and when the market's going up, that's all well and good. But for the bad days, which can come, which is when the market pulls back, we need to be making money on both sides. And more importantly, we need to protect our account because there will be a drawdown on Tesla, Palantir, on Nvidia, because those are high beta companies. They those stocks move really fast up and down if the market corrects. And in that case, we want to protect ourselves. So we're gonna buy puts on the SPY, which is an index for the 500 companies in the stock market. This the S&P 500 takes the top 500 companies, and we're gonna buy what's called a put. So similar to when we were selling calls, we're agreeing to sell our position, our stocks at a certain price. What here we're doing is we're buying a put. And what that means is that when this falls, we're saying we'll buy the SPY if it falls down to $420 in this case. Now the SPY is 600 today, and we're looking at 30% down from here, which is about 420. And if it falls that far, then we're saying we agree to buy it. But we don't have to. We just get the option to do so. So that's what's called buying a put. And this is a put that we're buying 2 years out, or sorry, 1 year out. We're going to buy this expiring January 2026. And because we have about 5,600 bucks, we can buy 13 contracts of this put. That'll cost us, roughly $428 per put times 13 contracts. So you're looking at about 13, pretty much using up all of that $5,600 that you have left. But what this does is it really protects your account when there's a drawdown. Okay. And by doing all these things that I mentioned, so to recap, we buy Pepsi, great dividend stock. We get money just for holding it. We buy Costco, great share growth stock. We get money as the company grows every year. Then we buy Tesla, Nvidia, Palantir, great tech companies. They're all considered high growth companies. They all are a very good in covered call returns. We use those to get monthly returns, right? So far, just doing the math, we've already made close to 5 grand, I believe, in our return, which is slightly more than what I promised, but that's not a guarantee every month. So that's why I kept it between 3 to 4,000 is what we're aiming for to make on this account, and we're protected if there's a drawdown. So if that makes sense to you, give me your 100K. I'm just kidding. But this is, I think, something anybody can do. And it's not super complicated. We're not talking about something that, you have to sit there and do every day. This is like you do once a month, you do these covered calls and you hold your positions for Pepsi and Costco. See where it goes.
Wait. Why don't more people do this?
Because they don't have a mentor that's taught them. That's the problem.
What's the? This got to be a catch. What's the catch?
I mean, the catch is that if you don't do it, you don't make money. That's the catch. I mean, at the end of the day, right? Like what we were talking about in the beginning, most people will put their money in an index fund or they'll put it in a high yield savings account that gives you, let's say, 5% for the year. An index fund, I mean, S&P for the last 2 years has been giving us more than 20%. But here I just showed us how we can make pretty much 5% a month. If we're making 5 grand in a month off of 100K, that's 5% return. So you make what somebody would make in a year on 100K in 1 month. And if even if the S&P did 25% last year, you can do that in half of less than half a year, right? 5 months will give you 25% if you get roughly 5% a month. But we're not saying you're going to do that. I'm saying even if you go lower, 3%, then even in a year you'll be doing better than the S&P. So that's kind of the thought process here. Now these numbers are static because I picked these charts a little bit in advance, so the market's changed a bit, but the idea remains the same.
Wait. What's your number? We're gonna have to talk later.
Oh, you want my phone number? Well, I don't give that out.
Wait, make an exception for me. We're gonna do business.
All right, we can talk offline. I'll get you. I get you. But man, I just want to say like thank you for showing me this because prior to this, I was one of the people who would buy stocks and I would hold them, and if they went up, then I would sell my stocks. I would cash out, and I'd wait for it to dip again. I'd buy it again, and I just kept doing that. And I've been doing that for a number of years, and I've thankfully been profitable. But this strategy that we have learned allows you to make money without having to always sell your shares. There's still a chance that they can sell, but when they sell, you're gonna be selling them at a profit anyway. So, um,
You're talking and trading like a professional.
I will say one other thing that I didn't mention. When we're doing these covered calls like Nvidia or Palantir or Tesla, the idea here is not to do this one time and be done, right? The idea here is in Palantir, for example, if you're making 5.77%, we want to write these covered calls 10 times in 1 year, roughly once a month. There might be a month or two where it was down and it wasn't paying so well, and that's okay. The goal here is to get an average of 10 great trades that will yield you, and let's say in this example, just for simplicity, 5.7 times 10, you're looking at 57% roughly. If the stock, keeps doing what it's doing. So you're going to get that percentage of return, even if the stock falls a little bit. It'll vary a little bit, like might go down to 4.5 to 5.
Yeah, my only question is what happens when the stock comes down?
Okay, that's a good question. So let's say this, right? So you bought Palantir here at what, 110, okay? And you sold your 1 month covered call, and now the stock's at what, sorry, you got 640 for it, and then the stock comes down. So here's what happens, right? Since you got paid 640, which is $6, 6 points of premium, 110 minus 640 gives you protection if the stock falls all the way down to $103, which means you technically didn't lose any money. Are you with me so far?
Yeah, so if the stock comes down, you're capping that with your gains, and the 110 minus say 7 is 103.
Yeah, so you're getting some protection for downside. But if the stock does fall further than that, right? Like say, for example, the stock went down to $100. So you're now down $10 per share. So let's say $1,000 down. But you can again offset that with your 640 premium. So you're actually only down about what, like 360. So you're not down as much as you would be. But it's also not a bad thing. And this is now we're getting into some advanced things here. What you can do is if the stock falls, but it's only a falling as a dip, because look at this share. I mean, look at this chart. You think this stock's going to go from 113 down to $30? I don't think so. I don't think that's going to happen. So if it falls down to 100, there's a very high chance it's going to shoot right back up to 113 or maybe go higher. So what happens is if the stock falls and you sold a call, your call will actually be in profit. It's not going to be entirely in profit, the entire 640, because it has time decay still left, and time premium left. But what you will have is some profit on that call. And in that situation, you can actually buy back your call at a profit and wait for the stock to swing back up, and then guess what? You can write it again, and now you can get what you would have gotten just one time, which is 640. You might have bought it back and kept, let's say, half of that premium, 300, and now you're writing it again, and you can get another 640, and now you've made 1.5 times the return that you would have, first time around. And so this is a little bit more advanced, and we can get into that. But for the layman, this is you can just buy this, set it, and forget it, and come back in a month. I see you're smiling over there. You must be happy over there.
Wonderful. So you're making like 5K a month average on this?
Yeah, I think you can make up to 5K depending on how the market's doing. So
Hey,
that'll,
can you show me that Pepsi slide again?
yeah,
I'm gonna take a picture.
I can send you a picture of this.
We're gonna have the video, right?
Yeah,
It's like about this.
yeah, and I can also send you a picture of this if you want.
Dude, this is a $1 million slide right here. This is like, man.
Yeah, like and look, there's a lot of good dividend stocks. Like one of the ones that I personally like is MO Altria, right? Has a much higher dividend and and a lower share price. But the reason I picked this one is because I see the chart, it's up and to the right, and we just happen to be in that moment in time where it's taking a little dip. I think it's a good buy right now because guess what? I think it's going to turn right back around and go up and beat its all-time high. It might take 2 years, but I don't mind holding Pepsi.
So I like how you, first of all, awesome.
Thank
I
you.
like how you presented it because, like, I'm just using some perspective. Like you said, a lot of people do have shares, and some people don't. They want to, but they don't, haven't done it yet, don't know how to do it. But some people have the shares and don't know about trading, don't know about these, let's say, advanced strategies. I like how you explain the dividends because some people don't even understand how the dividends work. And then you explain cover calls, getting like 3 to 5K%, and then or more.
Or
And
more.
then
Yeah.
you explained share growth, which is just to hold the shares. And then you explain the put hedge, which actually is an advanced strategy. So that I think that will be
I,
eye opening that you can make money going down, which some people don't get that. How to make
yeah.
money when it goes down with puts. So you
Yeah.
really covered all four corners. So that's
Yeah, my thought
that's
process was that somebody that sees this you could basically set up your portfolio like this from day one if you have 100K and you have all your bases covered. And yes, the first month we used all the capital, but then this next month onwards, the premiums you're getting, you have a choice. You can take that money, start paying your bills, or you can reinvest it back into your account and buy more Pepsi, buy more Costco, buy more Tesla, buy more of whatever. Or you just go ahead and, use that money to pay off your rent, pay off your car, whatever, right? Like it's up to you how you end up doing it. But the idea here is if you gave me a 100K, you show me how you have 100K in your account. These are the moves you can make today to get money out of your investment, get 5% return immediately.
now. This is great. Now I have a question.
Yeah, go ahead.
Let's say this sounds like the market's doing great, and it seems to be more on the aggressive side strategy.
Yes, it is. This is I agree. This is aggressive.
What would you change if you wanted to be less aggressive but more safe, secure, and add in that maybe the market's slipping a little bit. Maybe we're like a sort of not like a crash, but let's say a bear trend. How would your positions change a little bit? What would you do to offset the downward movement in the market a little bit?
Yeah, I mean, there's a couple of things we can do. Obviously, the easiest one would be to add to your puts that you have. You already
So
have
go from 5% to what? What percent?
you could go as high as 15% of your account, 20%. It just depends on how big of a pullback we've experienced, right? Like,
So as the market goes down, your puts are going up, and then if the whole market's going down, it's more deliberate Then adding to your puts will get you more money on the downside.
Correct. And those puts will be pricier on the downside. The reason it's smarter to buy a put now is because the market is up, those puts are cheaper. Um,
Yeah, so buy the puts when the market's higher, and when the market's lower, what do you do when the market's correcting?
well, one of the strategies we use, which is a little bit advanced, is you can sell naked puts. And that will get you premium as well. We actually did this recently, you know,
It's like a cover call essentially, but you're doing it when the market's down, when the
correct.
stock or the market's down.
Yeah, so like we were talking about the leap on the put, we're buying a year out. Well, you can sell a put a year out, 2 years out too, and that'll give you a pretty good premium right up front. So what I would do if the market's crashing and I'm holding something like a Tesla, or and now my Tesla is in like a 5, 10, $15,000 loss because the stock dropped 150 points. Well, I could just turn right around and sell a naked put on Tesla, and that'll probably pay me 14, 15K. And now I basically made cash out of my position that I sold, offsetting some of that paper loss that I have on my Tesla stock. But now I have 15 grand that I can go buy more puts with, that I can go buy even Tesla with at a cheaper price because I expect it's going to swing back up. So you have a lot of options there, right? So the first option was what, like buy more puts. Second option is sell naked puts and get more premium out. Use that premium to buy more puts or buy the stock at a cheaper price. Um, and then if you want to get into, because the market is more volatile, you want to get into safer stocks, I would look at instead of Tesla and Nvidia and Palantir, I would maybe start looking at some of the bigger and older tech companies like maybe Amazon, maybe Google, maybe Apple, because those companies are not going to have explosive growth like these companies are, but they'll be safer and you'll
Yeah,
still
we suspect Amazon and Google will have a lower drawdown.
possibly, yeah, that would be a big part of it. But I think in general, those companies have survived more storms than maybe Nvidia and well, Nvidia, but maybe more recently Palantir, right? That's more of a newer uptrend company. So like in that case, you might switch to an Apple, which is always going to be a good buy.
The captain must face the storm to prove his mastery.
Yeah, I think it's really apt that my trading name is Rainmaker because I was sitting outside last night and I'm thinking about this presentation and it was raining very hard, right? It was like a storm here in California. It was raining hard. And I was looking at it and I was going like, you know what? I'm not scared of the storm. I'm gonna look at it right in the eye and I'm gonna go through it because the market is easy when it's going up, you know? But when it's turbulent, when there's a storm, to be able to hold your ground, to be able to stick to your plan and have a mentor that you can talk to when you're losing your shit is really important, I think, especially for me and for anyone on their journey, right? Like I would love to be that for people one day. And I do help a lot of people like kind of figure out this stuff. Even the little that I know, I try to help people with. But at the end of the day, when the market is in a storm, when shit's like really on fire, you really have to be able to manage yourself and go through it and not lose your cool or lose your account essentially. So I really like that the rainmaker kind of symbolizes the whole thing. Like it's raining money, but it's a storm and we still gonna make money. Like it doesn't matter. So I think it's really apt. I like this.
I like the lightning bolt.
Yeah, right. I think that's gonna be my logo from now on. I'm gonna make a t-shirt.
The lightning bolt can bring fire if you need fire.
There you go. There it
Like
is.
quest for fire, lightning bolt.
Yeah.
All
What do
right,
you
man,
think?
that's
Do I
awesome.
do I do I do I did I graduate, you think?
You graduate with an A grade.
I appreciate that. And again, I know there's more. So this is just like leveling the playing field at this point, like understanding the basics.
Yeah, and explaining that is going to be your difference. I mean, that's you selling the dream basically.
Yeah.
And there's a lot of understanding and learning to do those trades, but that's it. That's the basics. So Good job.
Yeah.
Thank you.
Thank you. Thank you. Yeah, and again, my math was maybe slightly off on some of this. It's not meant to be exact. It's meant to show the idea of what we're doing. So anybody can do this.
The
Go
math
and
was good.
look at all these stocks at their current price and do the exact thing we're talking about. Now you have your real numbers for today. Um,
Yeah, you're gonna probably have people wanting to give you money, so just be careful. Okay.
well, you if you're gonna give me money and you're listening, it better be 100K or more. Otherwise, I don't want it.
All right. So I did have a couple of things I wanted to cover
Yeah.
after your presentation. Just something that came to mind. First of all, you have this trend. You know what stock this is?
Let me see here. And I can't see what this is. It's at 117. That's Palantir, isn't it?
Palantir.
Yeah.
So you see this uptrend, right?
Yeah.
This is like the burning match theory, where something just gets really hot.
Catches fire.
There's a lot of reasons why the stock's going up, but it's just in play. We use the words in play. The stock is in play, or blue horseshoe loves Palantir. Different things we talk about as traders.
What'd you say the
Stocks
last
in
one? Blue Horseshoe?
blue horseshoe
I'm
loves
not familiar with
Palantir.
that
You know
one.
about that?
No, tell me what that means.
Well, I guess it's before your time.
Yeah.
Wall Street, Michael Douglas. One of the big scenes was Blue Horseshoe loves Blue Star Airlines.
Okay.
So they're in a stock, and these people have like millions of shares. So when they start buying the stock, it starts actually going up because they're taking out. When you buy a share, you're buying somebody else's sell order, okay? And if you buy millions of shares, you're just taking out these sell orders, and it's causing it to go up
Right.
physically. So the way the stock market works, if there's an order at 100, and which is someone's trying to sell at 100, and then it's ordered at 99, someone's trying to buy at 99. It's like a struggle buying and selling. If I just came into the market and dropped $1 million or dropped a million, want to buy a million shares, I take out that 100, bam, and then the next order is 101. I take that out. I'm just buying it. I'm buying it up. I'm buying all these orders that people want to sell, and I'm physically taking the stock up. And that's what happens when the stock's in a nice incline like this, is that some people are just buying out, taking out those buy orders, and
Because the people that bought it lower are looking to take their profit now, and then the people that are buying these shares are actually still driving the price up because they're taking all those sell orders, is what you're saying.
yeah, but I'm not even saying that. I'm just saying when the market's going up, that these buy orders are being taken out. Don't worry
Okay.
about when they want to sell. Um, they want to sell at a profit, yes. And let's say if you're in Palantir, let's say we want to sell at 117. So
Sure.
we'll put an order here. We want to sell 117, and someone will buy that. And then what happened to it? Where's Palantir right now?
It's a little higher. 119,
One
I
one
think.
nineteen.
Yeah.
Yeah. So so we're taking out these buy orders. It forces stock to go up, and a lot of money, a lot of buying will make the stock go up because you're just taking out those buy orders. And in the Michael Douglas scene with Wall Street in 1987, he calls his friends in another broker, and he gives them the code. Blue Horseshoe loves. In this case, Blue Star Airlines was the name of the stock. And then those dudes called some people. Those dudes called some people. And then what happened? The stock went up to like $40 or something.
Mhm. All the institution starts buying.
But it was a trick because there was another dude, a bigger dude, that was at the end. Can't remember his name. He was like an English. He was like a knight or something. English dude. He had a lot of money, old money. He had more money than Michael Douglas. And I'll save you the scene, but I want you to watch the movie Wall Street, and then find the scene where Blue
Check
Horseshoe
it out.
loves Blue Star, and one of the scenes was like they tricked an old school trader, like with the basic strategy, more money, like let's say cash is king. It really is true because the more money you can, I don't want to say manipulate, but let's just say move the market more, right?
Yeah.
Um, why did I bring it up? Oh, so when you see trends like this, it when it just keeps going up, like pounds are hitting a high, hit a high in when it hit like 80, it hit at all time high, and people were saying, "Oh, it's overvalued. It's gonna come back down," you know. And what happened? It went straight up. So just because people say stuff, that's kind of like a fundamental. Like the people are saying that there's ratings, there's fundamentals. Technicals are a trend going up. That's a technical. So I
Right.
want you to know that I'm teaching that technicals are king. Technicals are going to show you more than the fundamentals. It's not that important, the PE, because the PE on Palantir is very highly priced.
Crazy. Yeah. It's like
What's
400
more,
or something.
what's more important is the trend. In this case, you have a burning match. And one way to protect yourself, so I do want you to run this trend. I don't want you to just sell Palantir and close at a profit because it's so hot going up. What you can do, you can put a stop order. You can put a if it hits 119, which it did today, 120.
Yeah.
You put an order about 115 to give it room to move, and then put a sell order at 115. That way, if it backs down, then we'll definitely capture a profit at 115. Then we can decide whether we want to wait and see get in lower, or if we want to just go to another stock.
Right.
But that way, we don't lose a lot of money because if it goes to 115, then it can go to 110, then it can go to 100. If it went to 100, honestly, fine, because it was like $30 not that long ago, you know.
Right. Right.
But if it went to 100 and you have it at 120, there's no reason why you wouldn't put a stop order. Whether you're doing a mental stop, meaning that if it breaks 115, I'm just going to sell my shares or close out my position, or you're just going to put an order in now saying sell stop 115 or 112 or 110. Understand?
Yep.
And that way it can move. It can actually move up and down. It can move to 116, 121, 115, 125, and then when it goes below 115, let's say your stop is like 114.99 or 115, then it will sell, capture your profit, and then that way you don't lose your profit. You're trading for
Yeah.
profit technically. You're capturing your profits. You're protecting your profits with a stop order, right?
Yep. Makes sense.
Yeah, and even if you have a cover call, you can still sell your shares. You'll just be short. Let's say you're in Palantir and you want to capture these profits. You put a stop order at 115 and 114.98, and you can sell your shares. Let's say your shares. Let's say next week the market turns down a little bit. Palantir goes to 113, and you sell your shares at 115, right? But now you have two calls or three calls out there that are short. So now you're naked calls, which means you're short, which means you're unprotected. So what you can do, you can buy a higher call. Let's say you have a 115, 120, 130, and then maybe you had a 70 also down here. You can buy the higher call to give yourself a cap, right? So this way, you still have those naked calls, and you don't want to just buy those back and give your money back because you want those to expire. So just spend a little bit of money, maybe 20% of your premium that you got for the calls, and you can buy like a 120, 125, 130, and you can match up your naked calls and make them a spread. It's called a credit spread. The credit spread means that the more powerful call is on the bottom, and the less, which is you're buying. I'm sorry, you're selling, and then the lesser powerful call is on the top, which means you're buying. So if you turn your call today into a selling 120, and then you have to sell your shares, that 120 becomes naked, then you can buy like a 130, you see. And it won't be that much more. I mean, it won't be a lot of money you'll spend, but you'll cap your protection, your short protection. And if you sell a 120 and you're getting, let's say, $6, let me see how much does a 130 cost. And this is just for March, right?
Yeah.
Because it could shoot up, in 1 month. I'm gonna pull up pounds here. So for March, it goes all the way to June, like 853 days. It's awesome. So if you did a cover call today, I would sell the 125 for 625. But then this is for March. But then what you can do, you can buy a 135 to 3. You can buy 140 for 250. That way, the maximum loss you're going to get on that is 15 points, 125 to 140. That's only if Palantir decided to shoot 140 at 1 month. Probably wouldn't do that at 1 month. But if it did do that, which it will do on a blue moon, you'll be protected. You only have a minor loss. Getting $6 for the 125 and giving back 250 for the 140, you're still at a $4 gain.
So it's a net credit.
Still at a 590 gain net credit, and you only start losing that money if Palantir goes into the 125, and then you start losing share growth or option growth, and then if you're getting 4 points premium for the credit spread of 125 by 140, then your break even will be 125 plus 4 is 129. Your break even. So
So
below
we need
129, you're in profit mode.
so we need the stock to stay either below 125 or above 140 in this case. Is that right?
No, you don't want it to go into the money. You don't want it to go into the 125. If it goes to 140 or higher, then you're going to be at a 15-point loss on your credit spread.
You want it to be below 120 because that's the short call.
125.
Sorry, yeah, 125. That's what you
Yeah,
meant. Yeah, so
yeah,
125. Yeah, so as long as it stays below that in a month, then you're good. You keep
yeah.
most.
And I want you to consider that you made all this money in the share growth. That's why you sold your shares at a stop at 115, because you want to capture all that share growth gain, which also benefits your account.
Yeah,
But the selling the call, cover call, you want to be able to manage that properly too. Like you say, jump out of a plane,
100%.
adjust your strategy. So you can, even if you did a cover call, you could certainly protect your shares from it going down by selling a stop order, by putting a stop order. And then you'll have a naked call. What you buy a higher call to protect that from it going too high. Make sense?
Yeah, yeah, yeah.
Yeah. What you suggested earlier before the recording, you suggested to buy like a 120 call. If you sell a 125, 130 call, that makes it a credit spread.
Yeah.
That's fine too, but that is a very ambitious, very aggressive strategy, and that only works best if the stock were to go to 125, 130, which
Yeah,
we don't
that
know if
works if
we
it
don't know
was a
if it will.
pullback. That works if it was a short pullback and it's gonna come shoot back up, and then you have.
Yes, yes,
But if it's in a downtrend now because it's trying to cool off, then what you're saying where you um buy a higher call is better because then
yeah.
you
I'm considering that we were up so high, we're up to lofty positions right now.
Mhm.
Palantir is so high right now.
Yeah.
So I don't want to do a debit spread up here. You know, we'll make it a short credit spread.
Mm.
What I would do, and I was kind of showing you in the group, I would do a debit spread in the money. It's not that much. It's not that much more expensive, and you have a higher chance of what? Of a successful trade.
I actually
For,
did one of those. You asked me to do one. I did one.
for example, yes. So the say pound is 119. I would buy like a 90.
Sell 100.
Yeah, sell 100 because what? That's going to cost you, according to this, eight
Gonna
fifty
cost, yeah,
five
855 for a
to
thousand
get a
shares.
thousand. They only get a 15% return, but the chance of that happening in a month
Yeah.
is very high that
A
that's
high-
gonna
It's a
be successful.
low risk, high success trade.
What most people try to do is, oh, look at pound shares going up. Let's buy a 130 and sell a 140. But then the thing has to go up another 11 points before you
Uh,
even get to the money. Whereas if you sell in the money, you're using more money, less return, higher chance of success.
we called this what, like a rich man's spread, debit spread.
Yes, and we're getting towards the end. I want to. That's a rich man's debit spread. Yeah, anything in the money is a rich man's. Anything that's kind of like high risk is a poor man's. I just thought about something. Let me share another strategy. Can I?
Sure.
It's called the collar. Have you heard of that?
No.
Speaking of rich man's, a collar strategy. You actually asked me one time, should I buy a put for NVIDIA? And I told you no because it's too expensive. Well, that was actually half true. Um, no, I wouldn't buy puts for NVIDIA to protect yourself, but there is a collar strategy. And the way the collar works is you buy 100 shares, you sell a covered call. Now, that's a long regular covered call, but you also buy a put lower. And what you're doing, you're taking the call money, the cover call money. Let's say you got, I don't know, how much from NVIDIA will you get a
Like the
month?
example I showed today, you can get, let's say, 695. That's on the high end, but
Let's just say it's $6. Okay, make it easy. You buy a put for $6. You're using all the cover call money you got, and you're buying a put lower for whatever $6 gives you. Now, the value of the collar strategy is what? Technically making no money, okay, because you're taking all your premium from the cover call, you're putting into a put.
yeah,
But why would you do this strategy? Because what? Because look at this. Look at this trend behind me. If you have a good stock that has an upward trend, maybe it pays a dividend. Okay,
sure.
Reciprocal pays a tiny dividend. Pepsi pays a good dividend. Remember we talked about controlling drawdown.
Yes,
You don't want to have a loss. Like the most important thing in trading in stocks is to protect your money, not to make money. You can make money after you protect your money. So you're buying the put. Let's say we do it for Palantir, okay? Or Nvidia, but same idea. Palantir, I'm showing
yeah, that's
a,
fine. Let's
a
do pound picking.
so
Yeah,
Palantir. Let's say you sell the 120, and you for and then you buy the 110 put, right? They have a 10 point window
okay,
trading range. Now, the stock goes below 110, it's capped off. You can't lose any more money because you have a put. Every point that the stock goes down, your put goes up. So your put capture at 110 loss, and your call capture at 120 technically, and you're using all the premium to buy the put. So that's a wash. But what you have a trading range where what? Your stock can go up and make profit. Technically, if it goes up, it's going to go up. You'll get the share growth, 10 points. You see,
yeah,
you'll also get a dividend if it has dividend. And what? You can't lose more than 10 points here, and you're capped at 110. So a collar strategy completely controls your drawdown. Gives you some upside potential, not all upside potential, but it gives you some upside depending on where you put your brackets, your call and your put. And if you had like $1 million, you wouldn't lose much. Even if the stock went down, you would lose. It would be capped,
I
and you would be
see.
able to own the stock. Regular person has stock; it can go down 10, 20 points, and they lose all that profit or all that share growth. But with a
Sure.
collar, you can completely control your drawdown, and you have the ability to ride the shares up between your window, between your brackets. That's what it does, and also it lets you get that dividend.
I like it.
Collar strategy, a very protective, very conservative strategy.
So if you did the collar strategy, for example, I mean, I'm just thinking out loud with you. So if I buy the shares and I write a covered call, at the sweet spot or whatever, I get my premium. Then I turn around and buy puts with that premium. Let's say the stock continues to shoot up, right? I can sell
You'll
my,
get the share growth that's between the window.
well, what I was gonna say is like, let's say the stock shoots up, let's say to 130. This is, I guess this is only gonna work if this exact situation happens. So like you buy the stock, you sell the call, you get your premium, then you buy puts. The stock shoots up way past your strike price that you sold. You're in profit on the shares. You sell your shares, now you have a naked call. But then what the stock starts to fall and you have a
You don't
put.
have a naked call because you have the shares.
No, I'm
Oh,
saying
why do you sell your shares?
because let's say the stock went up to 140. You
Okay,
wrote
but
the
well, you're changing the strategy. But
No, no,
okay,
no, but I was gonna say, like, for example, if you have that put on the other side and the stock shot up to 140, but then some big players start taking profit, which happens in huge extensions. Now the stock falls to 100, so it's below your covered call strike, and you have a put that'll make money. You can close your call out early and just ride the put's profit, and then you basically profited on both sides. You profited on the upside, and now you're gonna make profit on the downside.
yeah, because of the timing, you've made money on your call, you made money on your shares, by selling your shares when they went up, and then if it dips like you said, then your put will come in, and then you can
Yeah.
close your put at a profit.
And again, this exact situation has to happen for this to work. And I'm not saying that's always going to
And
happen.
that's kind of like your analogy with jumping out of the plane. You're tweaking your trade. You're adjusting your trade to the market.
Yeah, this is really interesting. I think we should talk more about this at another time. I like that.
Can we call it a win?
Yeah, let's do it.
Thank you, sir. This concludes session 12. Congratulations.
Thank you.
You are my star pupil.
I love it. Thank you, man. I really appreciate you with all my heart on Valentine's Day.
Oh, happy Valentine's Day. Remember, buy your significant other a gift.
Yeah. Cool.
I'm going to send you a recording.
All right, perfect.
Thank you,
Thanks.
sir.